So now let's come to Africa. Africa's biggest economies still have a recovery from the pandemic in the face of vaccine availability, shelf life of vaccine and hesitancy as their major focus. This time, all that is compounded with inflation rates, especially with the U.S. Policy tightening stance and interest rates, which everybody is expecting to be hiked tomorrow. Since the last meeting by committees in major African economies, U.S. consumer prices soared to a near 4-decade high. This may be setting the stage for the Federal Reserve to begin hiking interest rates as soon as March, which could lead to a sell-off of emerging market currencies and dollar bonds in nations. This is where it concerns Africa. Well, this will be one of the considerations, although economists expect most major central banks in Africa to prioritize supporting fragile economies over taming price growth by leaving key interest rate unchanged. Well, we're going to have that discussion as we await the decision of the MPC of the central bank with two economists. The first person is somebody you're very familiar with here in Channels. We have Dr. Mude Yusuf, is the Chief Executive Officer, Center for the Promotion of Private Enterprise. Thank you. And of course, you know, he's immediate past DG of LCCI. Thank you so much for always joining us. And then we have Dr. Emeka Franklin. Dr. Emeka Franklin is a director, Lagos Business School Sustainability Center up at Atlantic University here in Lagos. Thank you so much for joining us, Dr. Franklin.
Thank you.
So we have some hours ahead of us, so I think we should relax and get into the conversation. Okay, so let's look at some specifics in some major economies in Africa, and of course we'll bring you into the conversation as we look at those specifics. Let's start with South Africa. In November, the South African Reserve Bank's Monetary Policy Committee decided to raise the repurchase rate by 25 basis points to 3.75% per annum. This was the first time in 3 years that the Reserve would raise its rate. Benchmark gauge increased by 25 basis points, matching median forecast. Rand pairs losses after weakening on Turkish lira slump. Well, the bank's forecast reflects higher headline inflation for the fourth quarter at 5.3%. It was formerly at 5% for the year. And the next 2 years, headline consumer price inflation is revised slightly higher to 4.5% for 2021 to 4.3% next year, and then to 4.6% in 2023. Headline CPI for 2024 is expected to be 4.5%. The Reserve Bank officially targets price growth in its band of 3 to 6%. Its MPC prefers to anchor expectations close to the midpoint of the range. Well, the meeting is on in 2 days, on the 27th, and borrowing costs are expected to rise in South Africa while liquid capital markets make it vulnerable to tightening by developed markets. Meanwhile, economists are predicting at least 3 interest rate hikes in 2022 in South Africa. Well, let's hear what Dr. Mude Yusuf has to say to this. I mean, South Africa is regarded as the most industrialized economy on the continent, and we saw them raise rates in their last meeting, and they've had quite a lot of blows from COVID, and they also had power issues affecting this thing. Do you see the forecast of the economists coming up?
Yes, I think the inflation phenomenon is looking more like a global phenomenon. Just you have said, even in the advanced economies, we are seeing inflation 40-year high, 30-year high. I mean, in the US, we are talking about 40-year high. In UK, we are talking about 30-year high. And we're also having the same experience in the EU. So, and in Africa, the same thing. And South Africa, of course, is a well-exposed economy.
Yeah.
It has very strong linkages with the global economies and so on. So there's a lot of transmission of all these disruptions. You know, the supply chain issues, the issues of exports collapse and things like that. That, of course, has taken a toll on what we are seeing in South Africa. Of course, they have also taken some steps to stimulate their economy and all of that over the past 1 or 2 years. But perhaps because of the inflationary situation, this is the time now to begin to look at measures to reverse some of these interventions so that they can have a much more stable macro.
Yeah, because they're hinting that they're going to start withdrawing some of those.
Yes. And that is appearing as if that is the trend all over now, you know, reversing all those stimulus programs, injections, and all of that.
It would be interesting to note, Dr. Franklin, do you see any of those stimulus programs in Nigeria? I mean, is there anything like that? Have we missed it somewhere?
Of course, just as Dr. Musa said, I mean, the inflation that we're having now is global, and it's coming from the quantitative easing, support from the different central banks, different governments because of COVID-19. So now that we're believing that maybe the global economy is picking up, so the money circulation is high. So the best thing for the different economies is to see how they can start taming the inflation. And that, of course, in Nigeria, we had also our own quantitative easing in terms of what central bank did. And they are still doing, even for agricultural sector, for different sectors, and the money that they used in fighting COVID-19. So all the money that you see are in circulation. And the best thing for the different governments to do is to see how they can tame it. And that's why US is trying to raise interest rates. Europe is trying to raise interest rates. South Africa is trying to raise interest rates. In Nigeria is a different issue in the sense that our interest rate is already about 11 point something percent. So to sustain the growth, because of course, you know, we are not growing at the level we are supposed to grow. So there are speculations or suggestions that interest rate will be left at the way it is, at least for now. Maybe towards the half year, due to election, due to more money in circulation, the CBN might now start thinking about maybe how would they start raising interest rates to curb the inflation.
All right, so let's look at some other economies on the continent. Now we'll move to Ghana. In the same November, at the final meeting for the year, the Bank of Ghana's Monetary Policy Committee lifted its rate by 100 basis points to 14.5%. That was against market expectations of 13.5%. The rate is a signaling rate which is supposed to serve as a reference cap for all other rates in the economy. And that was the first time in 6 years that there was a rate hike, reversing some of the 250 basis point reduction announced in 2020 to help the country deal with the impact of the pandemic. At that meeting, the committee had to consider inflation, which had advanced to a 15-month high of 11% in October, breaking beyond the top of central bank's goal zone of 6% to 10% for the second month in a row. For November, the rate was up to 12.2%. It accelerated further for the 7th straight month to 12.6% in December. Well, this is part of what the Bank of Ghana will be considering as they meet. Today, they'll meet from today to the 28th, but on the 31st is when we're expecting them to publish their own decision here. And Ghana has also been, Dr. Muda, Ghana has also been in the news recently. We had Fitch Ratings cut their country's long-term debt assessment further this year, you know. So, I mean, where does this place them? Where do you see it tilting their decision?
Well, I think Ghana also has some major macroeconomic challenges. They are struggling with debt burden, capacity to service debt, and all of that. And all of these have a lot of implications for the way they're able to stabilize the economy. So I think they also should be looking at a way to normalize rates, to normalize their monetary policy, so that they can manage the macroeconomic instability a lot better than what it is now, because you can see that they are struggling with inflation as well. They are struggling with high debt burden, high debt service, and all of that. And these are some of the reasons that led to the
downgrade of their Fitch. Yes. All right, thank you so much, Dr. Mudawa. We just tell you to please hold your thoughts. Of course, we still have some time on the program. This is a special edition of Business Incorporated as we await the announcement of the decision of the MPC of the Central Bank of Nigeria. We'll take a break now. When we come back, we'll continue on this special edition of the program. Do stay with us. Oh, welcome back. Well, we just discussed Ghana just before that break. Now, let's move to Kenya. The Central Bank of Kenya Monetary Policy the final meeting for 2017 worked with 3 surveys to arrive at their decision. They worked with the private sector market perception survey, the CEO survey, and the survey of hotels revealed the highest level of optimism about economic growth prospects since March 2021. After considering these factors, the committee noted that inflation expectations remained anchored within the target range. Leading economic indicators showed that continued robust performance. Now, in November, the CBK foreign exchange reserve, which currently stood at $8,768 million for 5.36 months of imports cover. Consequently, the MPC decided to retain the central bank rate at 7%, concluding that the accommodative monetary policy stance was appropriate. The next meeting for Kenya will be held on Wednesday, where the monetary policy makers are expected to keep borrowing costs unchanged for the 12th consecutive time after inflation softened to 11-month low in December. Let's just move quickly to Angola now. In Angola, the Monetary Policy Committee of the National Bank of Angola left all monetary policy instruments unchanged at its last meeting. As such, the basic reference rate remained at 20%, the standing liquidity lending facility 25%, the 7-day permanent liquidity absorption facility interest rate was 15%, and coefficient of required reserves at 22%. The decision is aimed to continue supporting the domestic recovery in the context of persistent inflationary pressures. The annual inflation rate climbed for the 7th straight month to 26.9% in October, its highest level since July 2017. At that meeting, some of the factors which the meeting considered included credit to the economy, increase in monetary base, value of the kwaza, that's a currency, which at that time appreciated against the US dollar, resisting inflation pressure, and consumer prices for September to October. Before the November meeting, the Bank of Angola had raised its rate in July for the first time since 2017. It raised its policy interest rate by 450 basis points to 20% in July. Well, inflation came in at 30.4 for December, unchanged from November's figure, and annual average inflation came in at 28.8. Well, they are meeting on the 28th, where leaving the rates unchanged would allow last year's policy move to filter through the economy. So that's another expectation that Angola would leave their rate unchanged. And of course, we also have Nigeria. This is, of course, where the big deal. Oh, but before we go to Nigeria, where we're going to settle in. Inflation, obviously, is a major topic, you know, with MPCs and CBNs. But is it the only deciding factor at this time? We still have COVID. We still have a lot of supply chain disruptions.
Well, it is a very important variable in economic management. Don't forget that the principal responsibility of a central bank is price stability. You know, whether you are talking of interest rates, you are talking about the general price level, or you are talking about exchange rates. Price stability is the core function of a central bank. So that is why there is so much discussion around inflation, you know, and sometimes even around exchange rate, around interest rates.
Yes.
Because that is the core responsibility of central bank.
Okay.
Although in many of the economies in Africa, there are other drivers of inflation outside the monetary sphere, you know. There are supply side issues, there are production cost issues, there are all sorts of supply bottlenecks that contribute to inflation, which are sometimes far, far beyond the purview of the central bank. So all those factors are
so Dr. Franklin, let's just backtrack just a little bit and look at how this rate, I mean, sometimes it could just come out like they're just figures. Okay, inflation rate is this and interest rate. I know at a point in Nigeria when we had inflation by the MBS, we asked, does it capture the reality, you know, of what's really going on there? All these rates, the MPC meeting and their decisions, what should it mean? What does it mean to the man out there? What does it mean to the SMEs, for instance? How does it affect them? Why should they care what the decision is?
I mean, they have, as Dr. Yusuf mentioned as well, inflation, of course, affects everything in the economy. It affects interest rates, it affects investment decisions, it affects everything you do. Even the salary you receive is affected by inflation. So the common man or on the street is asking, if supposing interest rate goes up or inflation goes up or comes down, how much will bread price change? Will it come down or will it go up? How much will a mudu of gari change, or rice or yam, as the case may be? So once he understands that he bought a tuber of yam 2,000 last month, and this month that tuber of yam is now 2,500 naira, it means that he knows that based on his disposable income, that he's not able to afford the basket of food or needs that he normally buys with the same amount of money that he has. So that's the waiter. But for the SMEs, of course, they depend on input to have an output, or for every firm, actually. So it means that once input prices are increasing based on what they use in producing, whether you're producing bread, for example, if the wheat price goes up, whether you're producing water, if the plastic bottles goes up, it means that at the end of the day, the output price will also go up as well. So it affects everybody. So, and that's why everybody's interested with regards to inflation, with regards to interest rate, with regards to foreign exchange, because of course, you know, we have to have dollars and all that. So all of them are related. But once inflation goes up, it means it's going to affect everything, because it affects labor, it affects the SMEs, it affects the market woman, it affects the housewife, it affects even the students. So everybody is affected. And that's why all of us are concerned with regards to how will the MPC do with with interest rate, which will now affect also the economy as well.
So what should, I mean, let's look at Nigeria now. We know US, it's almost certain tomorrow we're going to get a hike, you know, in the interest rate. What should the MPC Nigeria be looking at now to decide? You know, when from what you have said now, the SMEs, the people out there, I mean, we have the price of oil on one hand, you know, and all those variables. What should they be paying critical attention to decide, you know, what the rate should be?
They are going to be paying attention to so many factors, but principally is how do you maintain price stability? And of course, overall macroeconomic stability of the country. So they'll be looking at, they will getting input from different stakeholders, different people, in terms of how do we ensure, supposing we increase interest rates, what impact will it have on the economy? Supposing we keep interest rate the way it is, what impact will it have? Supposing we reduce it, what impact will it have? So when they do a kind of scenario analysis based on these different options, they will now be able to say, okay, it's best to keep the interest rate at the way it is, it's best to increase it, it's better to decrease it, in line with what they want to achieve, in line with the targets in terms of bringing inflation down, in line with bringing foreign investors, in line with increasing employment, in line with reducing poverty, in line with all these macroeconomic targets that we are trying to achieve. So that will determine the way they will go, whether they will go down, keep it the way it is, or increase the rate.
Dr. Muda, okay, okay, we just have to we'll close now. That's just this segment, and then, of course, we'll be back. So like I said at the beginning, this is a special episode of Business Incorporated. It's decision day with the MPC. We're waiting on the CBN now to announce the decision of the meeting, but we'll just take a short break now, and then we'll continue on the other side of the program, where we'll get the decision and, of course, look at the scenarios, the various scenarios, and how it will or may affect you. Do join us again.